It took me years to become a consistently profitable trader, and candlesticks are the foundation of what my strategy and profitability is based off of. And so I've been trading for over 7 years, and I want to pass on to you the information that I have gathered over my time. Now, this course is going to slowly build on itself in terms of just starting out at the basics of candlesticks, but then going on to candlestick patterns, how to apply them into the market, find support and resistance with candlesticks, and then how to use them for a trading strategy. And I will show you my trading strategy that I use to be consistently profitable using candlesticks. So, quick overview of how to understand candlesticks is candlesticks tell you 4 things about what the price is doing. So if you're looking at something like a daily chart and you see a big green candlestick like this, what it's telling you is the market opened up here at this price and closed at the price up here. That is what this green box or the body of the candlestick is telling you. And then the wicks or the smaller lines coming out of the box at the low and the high, those are telling you the highs and the lows of the day or that candlestick. And so it's basically telling you that the market for that day on a daily chart opened here, maybe sold off a little bit, really rocketed higher, and then sold off a little bit and then closed up here. That's all that it's telling you. And then on the flip side, you have a bearish candlestick, which just means that the price went down. The market opened up at the highs of the red box, closed at the lows of the red box, and then had the highs and the lows of the day at slightly different prices. And then your last candlestick is called a doji candlestick. It pretty much just looks like a cross or a plus sign, and it has no body. And that pretty much just says that the price of that candlestick opened here, went up potentially, sold off a ton, and then reversed and closed at the same price that it opened. That is why there's no box there. So that's a very neutral candlestick pattern. It basically means that over the time period of this candlestick that the price didn't move at all. It was a very consolidation type of a candle. Now to go into a little more advanced candlesticks is here we have a hammer candlestick. All this is saying is that the price opened up here, sold off, and then the market reversed and then closed at the highs. And so this is a very bullish candlestick because it's telling you that the market tried to sell off and then it reversed that and closed at an even higher price. And then you can have that on the flip side as well for a bearish candlestick or a bearish signal. The market opened down here, tried to break higher, and the market reversed that and closed at an extreme low for that candlestick. And so that is a very bearish candlestick, generally signifying that the price may continue lower. And so you can have a lot of different candlestick patterns that you can create from candlesticks and how they can form. And so you can have 2 candlestick patterns where you combine 2 candlesticks into one. And a good example of that is just the bullish engulfing candlestick pattern here. And so what this is showing you is that the market tried to sell off and then reversed higher. In a way, you can think about this as just a hammer candlestick if you combined those 2 candlestick patterns. Is the market opened up here, sold off, and then reversed, and then closed up here at the highs. And so that is why a bearish engulfing candlestick is a bullish reversal pattern, is it's showing you either the market over these 2 candlesticks doing kind of this reversal style, and then that's the exact same thing as a bullish hammer candlestick pattern we have right there. And so you can really combine these all over the place in terms of just a lot of these are just showing you reversal candlestick patterns, and you can have the exact same thing on the flip side as well. You have a bearish reversal or engulfing candlestick here in terms of the market opened here, tried to go higher over these 2 candlesticks, and then reversed back lower, closing at the lows. And again, that makes, if you combine that into one candlestick, that makes a bearish candlestick hammer pattern. And then from there, you can go into 3 candlestick patterns. And a lot of them right here, you can see they're pretty much the exact same. And again, all they're telling you is that the market tried to sell off, consolidated, and then reversed. Same with this guy. Sold off. There's actually a doji in this one, and it consolidated. But the big key with these ones is you see all 3 of these bearish candlesticks here are really big. They're big bearish candlesticks signifying a big sell-off in the price. And then the middle candlestick pattern here is a very small or neutral candlestick. It's either a doji or here the body is really small. If you compare this candlestick to this one right here, it's a lot smaller in terms of how much price the market actually moved during that candlestick. And then the market makes a massive candlestick reversing the other direction. And you can have this on the flip side as well in terms of looking for the market to go down. And another key is if you look at these ones, the price actually gapped between where it closed at the previous one and opened at the next candlestick. And then same on this side, the market closed right here and then gapped and opened right here. And just that signifies a lot of momentum in that direction. Now I trade on a smaller time frame, like a 1 minute chart. You don't really see gaps in the price on that type of time frame. Generally a gap comes from when the market has closed. And so if you see a gap like on a daily chart and you see that, one day it closes here and then it gaps to a higher price like this, that shows a lot of momentum. But if you then see that day close right here with a nice doji and then gaps lower and produces this kind of candlestick, that is a pretty good reversal pattern. And then just to show you what these can look like with other candlesticks around them, here's a couple of the ones we talked about. You have a hammer candlestick, and then technically a bearish hammer candlestick is called a shooting star. These all have a ton of names and you don't need to remember the names. I don't know the names. I more of look at what the candlestick is telling you in terms of the price. Right here we have this gravestone doji. It again just signifies it's very similar to this shooting star over here. It tells you that the market opened here, tried to go higher, and reversed and closed here. And so if you see that, that's a good likelihood that the market might reverse. And then same with the shooting star or evening star here, is the key here is looking at, okay, we have a big bullish candlestick and then we have a neutral consolidation candlestick. That really shows that the momentum has been lost. You would expect that the next candlestick, if the momentum kept going, to be a big green candlestick. Right here, there's a big green candlestick. Next momentum one was a big green candlestick. So the momentum kept going. But because you have this neutral small candlestick where price didn't really move, it shows you that loss of momentum. And then having a big momentum candlestick in the other direction, you can see that it shows a really good chance for a reversal and a continuation that the market starts going down. And you see here in this one, there is no gap between these two prices. You don't need the gap up or gap down that we had in that last example of these kind of 3 candlestick patterns. You don't have to have that gap up. That's just a part of it and something to be looking out for. Now, big thing to understand is these candlesticks are not going to show up the same every single time and really perfectly on your stock chart. That's why it's more important to understand them and be able to read them. So when you look at an actual stock chart, and so right here, we see that candlestick pattern we were just looking at, and these 3 candlesticks are showing you that, okay, there was a lot of bullish momentum here, and then we had a kind of doji consolidation candle where the market really didn't move around that much, and then we had a really big bearish candle where the market opened all the way up here and sold all the way off. And so again, that's still telling you what that pattern generally says. It's showing you that the market had a lot of momentum, it pushed higher, and then it kind of just started to consolidate and go into a small range. And then it had a big reversal lower, pushing the market back down, and it kind of gave this whole swing back up here. And so that's what you want to be doing when you're actually looking at a candlestick stock chart, is trying to read into what the candlesticks are telling you versus trying to fit those patterns exactly. Down here, just on these lows as well, you have a really good example of that as well. This almost takes really into account these 5 candlesticks here. And again, that's showing you that we came to kind of a potential bottom, found some consolidation, and then strong bullish move came into play. And that really signified the bottom of that move that it had. And so that can be your signal to jump in on a reversal trade in the market. Now, big thing though, is you cannot be using these by themselves. You can't just go into a chart and trying to read, looking for these by yourself, because what you could find, if we just look right here, here's a really big bullish hammer candlestick pattern right here where the market showed that it, okay, sold off and then ripped back higher. Now, this candlestick wasn't super strong right here, but if you thought, okay, I'm going to get in on a trade betting higher based on this candlestick, candlestick right here, well, you can see that that didn't really show the bottom. And so what you need to be doing is you want to be aligning these up with support or resistance levels. And so I don't really see one for this on the chart right here. And so that's not necessarily a good spot to go. Well, actually, if you zoom out, here we go. We have the market bottomed here already. And so if you look back there, you can say, okay, the market's bottomed in this area before. I'm going to draw a support level off of that. And that's how I like to draw support or resistance levels, is just look back in the chart, see where a significant bottom has happened. And here you can see, we'll just zoom out a little bit more to really get some more data. Okay, the market bottomed there again. Market bottomed here twice, really nice swings off of it. And so I'm going to make a support zone off of that and understand that, okay, when the market comes into this area again, it's potentially going to find support. And you can see it broke that level slightly, but it's okay. You want to just treat support or resistance like a zone. You want to know, okay, the market's likely to find some kind of support here. If it breaks it a little bit right here and reverses back up, that is totally okay. The key is to understand that's where the market is likely to reverse, because it's done that twice in the past already. And so when it does that, you want to get in on a reversal. And so same on the flip side is looking at the highs here. The market had a really nice push higher here and lower. And so what I'm going to do is I'm going to draw a resistance level based off of that. We can try and zoom out, see if the market topped here again. There's a second spot where the market found resistance, where the market came up, sold off, came up, sold off. And so I like to do that for my support and resistance levels, is look for generally two key reversal spots in the market to draw my support and resistance, and then you just extend it. And so, you wait for the market to come here, touch it, see your reversal pattern, and then same on the upside here is the market comes up, you see it hit that support or resistance level, and then you look and see, okay, we have this pattern right here that shows a clean switch of momentum at this level. The market had that really big bullishness consolidation and then showed a big change in momentum to the downside. And so a big thing I like to do when actually looking for reversals using these candlestick patterns is I want to make sure that the trend that it is currently in is broken. And so what I mean by that is if we're looking to bet that the market's going to go down up here, well, we want to make sure that there's a uptrend that is broken. And so you can see right here, there's pretty clearly that I just drew based off of this low down here, and then kind of just where the market was making rough bounces. I just used a support line and just said, okay, it looks like the market's in an uptrend, and I'm going to assume it's in an uptrend until it's broken that level. And then right here, you can see it broke that level. And so for me, that shows that, okay, this uptrend is broken. We're at a resistance level. That's a good signal that the trend is going to slightly switch, because when it comes to trading, you want to make sure you're on the right side of the trend, or you have a good understanding of their overall context of the market, because when the trend is going a certain direction, you want to go with that trend. And so right here, the market has been in an uptrend. And so we don't want to potentially bet that the market's going to go down, or on the flip side over here, seeing that the market's in a downtrend right here, you don't want to bet that the market's going to go up until you see that downtrend broken. Because when it comes to trading, you don't know what the market's going to do. We're only trying to really predict what it's going to do. Potentially, it still could keep going down or keep going up. But the key is to have rules and reasons why you're jumping into a potential trade. And so for me, my first step to jump into a trade, if we start talking about a trading plan, and the one I use to be consistently profitable trading the markets, is we already talked about, I look for a support or resistance level. And I just look for those two clean touches that it does. And so for the support level, we had 2 touches there, and the resistance level, we had 2 touches there. And then you just want to wait for the market to come up to that level right here. The market's at that level, and you want to make sure that that uptrend is broken. And so right here, the market has broken that uptrend. And then I have found that I like to wait for the market to make one more attempt to go higher. And so why that is significant is if we just quickly look at how an uptrend works. And so an uptrend, the super basic is you have swings in the market that are making higher highs and higher lows every time consistently. And on the flip side, for a downtrend, the market's just making lower lows and lower highs. It's kind of like a stair-step pattern as it goes down. And so when an uptrend switches, well, it starts to make lower lows and lower highs. And so the trick is if you're looking looking for an uptrend to reverse into a downtrend. If the market is right here and starting to, making more candlesticks, you don't know if this is either the market starting to reverse and make a lower high than the previous high and put in, start a downtrend, or the market could just keep going up. And so what I like to do is I like to see the market come up to a resistance level, have its uptrend, make a high, and then I want to see it make that attempt to essentially keep going higher. I want to see this happen, and I want to see it start doing this, because I don't want to get in on a short right here betting the market's going to go lower right at this point when, well, the market could just keep going higher, because then you feel kind of stupid. You just got in and the market just kept going up. And I want to see the market essentially start to do this, showing that, okay, it's putting in a lower high than this one up here. That is a really strong signal for it to keep going lower, or start going lower and start a trend down and reverse off of our resistance level up here. And that goes same for on the downside. And so right here, if we just look at this trade, there is this clean swings that it's making. And then right here, you can see it makes that lower high or attempt to keep going higher that we have, and then it shifts back lower. And so if we're reading into the candlesticks, look at these two candlesticks right here. And so this is where your skill of reading the candlesticks comes into play. The green bullish one shows that the market opened up here, pushed higher, kind of pulled back, and then closes. And then the red candlestick opened here, made a big push higher, and then reverse that whole thing. And so what that tells me is the market tried to keep going higher. And then if we kind of just connect it to this area up here, this is essentially just this. It's a big swing high. These candlesticks right there are this. Hopefully that makes sense. And so that's showing you that kind of reversal. And so I want to jump in right here and bet that the market's going to go lower and then hopefully catch this swing down, kind of like this swing over here. And that's where I like to jump in on a trade. And this is an actual real recording of a trade I took at that point in the chart. And so this is to show you that this is an actual strategy that I use. And I'm not just explaining this on a random spot in the chart that I found. This is an actual trade that I took using this exact setup. To quickly go over that again, is I had that resistance level up here. We saw that the uptrend was broken, and then we just waited for it to make that little pullback here. And then it had a really big bearish candlestick showing you a clean momentum down. And then I jumped in on a trade right here, betting the market's gonna go lower. And I'm starting to slowly move my stop loss down as the market moves down to capture my profits. And then the market comes to a support level down here that we're just looking at, and that's where I want to jump out of the trade. So that trade worked super clean, really easy in terms of when it started going in my favor. And so that's kind of what I do when I'm looking at candlesticks. And so I know that happened really fast. And so let's dive into another example where I can walk you through a little bit more of my strategy and how you can use it as well. And so I am trading on the S&P 500 futures on a 1-minute chart, but you can use this on really any time frame and any market, because candlesticks are really the same across any market and they adjust based on whatever time frame. You can do this on anything you want. And so that is why candlesticks are so powerful. If you learn a strategy on trading a certain market, you can take it to a different market or stock and you can trade using that same strategy. And so here is another example of a real trade I took. And let me show you the first thing of my checklist I like to go through. And that initial one is, where did this support level come from? Because it's on a recording, I can't really zoom out very easily, but I can just pull up the chart of where this trade was taken. And so this trade was taken right down here. And so you can see the market bounced down here, and it kind of had a bounce here. And so that's pretty much what I'm drawing my level off of. I'm drawing it off of the low down here and then these bounces up here. And so I'm just seeing that, okay, when the market comes back down to this area, I want to look for a potential reversal off that area. And a key here actually that I haven't told you about yet, this chart is a 15-minute chart. And so I trade on a 1-minute chart. And so the significance of that is I look at a larger big picture time frame for a lot of my support or resistance levels, because on a larger time frame, the swings in the market are clearer and they're going to be more significant. If the market on a larger time frame than what you're normally trading has bounced off of this area, well, if it comes back to that area, it's likely to bounce and have a big move off of that area and then going into a smaller time frame, like a 1 minute chart, you can then get a more accurate entry and try and pick the bottom better. And so that is what I look for when I am finding my levels. And so that's kind of step one of looking for trades. And so, if you're trading a 5 minute chart, you could use a 30 minute or an hour for your levels. Or if you're wanting to trade on a 30 minute chart or an hour chart, you can use, something like a 4 hour chart or a 2 hour chart. The idea is just using a higher time frame than what you are trading. And so this kind of jumped ahead already. Let me zoom back real quick to talk about step two, and that's making sure that the downtrend is broken. And so I like to just use simple downtrend lines. I don't use any indicators in this strategy. That's why it's so powerful, is it's very, very simple. And simple may seem that it's silly or it shouldn't work because trading is really hard, and it makes sense logically that, if it's complicated or if it's hard, it needs to be complicated. And in reality, I have found that simpler actually makes it easier because it's already so complicated to be consistently executing the same strategy. There's so much that trading throws at you to begin with. And so I found that having this simple 4-step checklist of a support level, making sure the downtrend is broken, looking for the market to make a kind of a pullback or retest in its downtrend, and then looking for a candlestick pattern down here to get in on a trade. And so that's why I found something so simple to actually be very effective. And that's why candlesticks are so powerful. And so here with this little downtrend here, it's a very tight downtrend that the market's in. It's just, you can see it's just making red candlestick after red candlestick. And so right away, it's pretty clear when that breaks, when it makes a move up here. And this move up here also shows you that, okay, we've come down to kind of this low area right here, and it's made a pretty clean bounce off of that. And so it shows you that there's buyers down here, there's strength, and it's likely to potentially find support. And so when the market comes down here into this kind of consolidation, and it does that pullback in the downtrend that we're looking for to start going higher right there, that's what we're looking for right here. And then, so it's pretty much done that. And so we're looking for this to essentially hold and start going higher. And so what I'm seeing here is, if we just zoom back briefly to talk about this exact candlestick, is the market makes a really fast shoot lower there all of a sudden, and then it starts to recover that. And so for me, that shows that the market attempted to break this lower, and then it reversed that, and it started to break higher slowly. And so I didn't get in right on that candlestick, but I combined that candlestick with this candlestick right here. And if you read and look at this candlestick as well, it had another bullish hammer candlestick. And so all these candlesticks are telling you is the market, it happened there again after I had jumped in on a trade a little bit, it shot lower and then reversed. And so you see another hammer candlestick pattern form there. And I accidentally didn't get in on all my contracts right away. That's why there is really a 5 and a 10 limit order there. I essentially wanted to get 15 contracts here. You can see that's how many futures contracts I have. Just think of them like shares. And so I jumped in based on that. And so I like to put my stop loss below that swing right there to kind of dive into it more, because if we're, looking at the downtrend, okay, if we're going in a downtrend and we're going to start going higher here, and I put my stop loss below here, well, if the market instead goes here and comes back and breaks that, well, I think it's likely to keep going down, and I'm just wrong. And, trading, you are going to be wrong. It's okay. You need to just get out when you are wrong and cut your losses. You don't want to get married to a certain trade. Don't go into trading and think, okay, I'm going to get in here because I am 100% confident that this is going to reverse, because in reality, you don't know what the market's going to do. I don't know that this is going to reverse here. I've just found out that over time and practice and working on this strategy, that having these 4 things align up makes it really likely, or more likely, for the market to make a big reversal here. And so because of that, that's why I focus on this strategy, and I look for the market to make a decent move. I generally just kind of have a more fluid management style, which is a little more complicated, and I don't necessarily suggest starting right away, but I like to see what the market can give me, because maybe the market goes all the way up here and I make 5-6 times my risk, and I get, that's 500-600% profit essentially on the trade. And so with my risk being down here initially, you can see now I move moved my stop loss up to here, which is essentially break even. And so if the market comes back down here, I'll just get knocked out and I won't lose any money on the trade, but I took my shot still and gave the market a chance to go. And so why I haven't taken profits yet is because I think that we are going to have a larger reversal off of this level. And so I like to let the market kind of go, and I'm okay holding through a couple pullbacks that the market does. Now it is kind of getting near these highs up here, but I see that as kind of a micro resistance level. I want to pay attention to the big ones. We have that big resistance level up here from a larger time frame, 15-minute chart in my case. I want to be aware of it, but I don't want to just close out of my trade because of that. And so you can see as this thing develops, I put in a little uptrend here, saw, okay, maybe the market is going to break and reverse off of that. And so you can see it started to make, it made a little hammer candlestick pattern right here, which I think is a really good little micro pullback to move my stop up based on. And really because I have more of this trend line in place that it's broken and this little resistance level. And so I think, okay, if the market comes down here and makes a little pullback and then starts going down, essentially, I want to get out. But if it's going to just pull back here and slowly keep going higher, then I want to stay in the trade. And so what moving my stop loss up here does is it captures some of these profits that we already have. And so moving forwards, this is where reading the candlesticks comes into play when you're managing your trade. And so again, you can see the market made a little micro pullback here. I moved my stop up again to capture some of those profits. And the market's kind of just chugging along here, not really going in either direction. And so I want to give it some wiggle room to move around and potentially either break higher, hopefully, or if it knocks me out, it knocks me out, and that's okay. We still got a good trade at that point. And so you can see I'm just kind of analyzing, seeing that, okay, the market's kind of in a slight upwards channel, and usually a channel break on the upside, to actually dive into that a little bit, we have a channel right here. When I see a channel overshoot like this, a lot of the time it can signify the trend is coming to an end. And so that's why I just move my stop up here as well and keep it really tight, because I think it's a potential that the trend is coming to an end. And it looks like we start to have a tight upwards trend line there. And so that's where that management starts to come into play as well. And so again, I'm just managing this trade in real time now. You don't have to do that. You can just have a fixed profit target of 2 to 3 times your risk. I think that's totally okay. And that would get you out somewhere out here. And that's a really good way to consistently make money trading. And because, well, just to kind of show you is this trade, the market kind of shot up here really quickly. And so I'm up a lot more on that trade, and we're getting near the resistance level up here. And so when the market has a big bullish candlestick like this, well, if it reverses, it's likely to reverse back lower. And so I like to tighten up my stop loss based on that. And so I'm going to get knocked out of it right there. I pretty much move my stop loss up and get knocked out. And so here are my trading results over the last year and a half. And by no means am I making money every single day or every week. But the idea with trading is that you are consistently making money over the long run. You're going to have times where you're losing, at times where you're winning and making a lot of money. It's going to have ups and downs. That's the crazy thing about trading. And if you want to learn more about how I consistently and effectively execute this strategy, I have a free class that I link in the description of this video that I go way more in depth into the strategy and actually how to effectively trade over the long run that I do not talk about anywhere on YouTube. And so if you want to take a deeper dive into trading, check out that free class in the link in the description of this video. And if you want another overview video like this one where I talk about more about my strategy, give you kind of the basics, check out this video right here. I give you more examples and walkthroughs like this one.